Do you need to have an LLC or trust to start investing in real estate? So first off, let's just talk about what LLCs, trusts, and corporations are. They're basically legal entities. They get what's called an EIN number, which is an identification number, which is kind of like a social security number, but for businesses. There's a couple of things. There's limited liability companies, which have become more popular in the last 15 years, maybe 20 years. Before that, it was just corporations, corps. And most people would do what's called an S corp, which is a pass-through entity for tax purposes. So there weren't double taxation on the corporation itself. So some people have S corps they're operating in. Some people have LLCs. The other thing is there's trusts, where basically you're purchasing the property in a trust. Revocable, irrevocable trust, there's some differences on there, but it's just basically a way to hold an asset. So the question is, why do I want to hold an asset in any type of an entity, whether it's an LLC, a corp, or a trust? Why would you want to do that? Well, there's a couple of reasons. One is the LLC or the trust is the owner of the company, which means the liability, if a contractor slips and falls and dies, in most cases, the liability is going to be with the LLC, which shields you and any personal assets you may have. Now, if you're like me, when you first got started in real estate and you really didn't have a lot of assets, I wasn't that worried about putting things in trust. Frankly, I was worried about acquiring properties. And then once I acquired some properties, then I got an attorney and I'm like, what should I do here? And he's like, let's transfer these all to LLCs, which makes a lot of sense. And so we did that and we established them. So do you have to have an LLC or a trust to start? Absolutely not. Why would you want one to start? Well, for the liability reasons. So slip and fall, someone dies, whatever the case is. Now, if you're doing a fix and flip, I recommend doing a LLC, but it's called a special purpose. And this is what we do for all of our members. So each time you do a deal, it's an LLC that's only for one deal, which means liability is only with that one LLC. It's a single purpose LLC and it's to hold that one property until it gets resold and then it gets paid and it's done. So it's an special purpose LLC, which is what I would recommend if you are flipping properties. But you don't have to go out there and form one today because we actually are going to recommend that we help you with the formation of that. So what do? You go and you make offers in your name and then you can put and or assigns. Or the other thing you can do is we can do like the property address or something like that. Typically we do 123 Main Street Industries LLC. And we can make an offer in that name. Either way, you just want to be able to transfer it. Now, that's for a fix and flip. A fix and flip, the special purpose entity works really well. You don't have to have that established to go put it under contract. You can put it under contract in your name and make it assignable or put it in the name of what you're going to create the LLC for. You can do that as well. Yes, there's some technicalities around that, but in generally speaking. However, if you are going to go get a bank financed loan, okay, you're going to go to the bank and you're going to get a financing loan. Now, whether this bank is like Wells Fargo or it's a DSCR loan, debt service coverage ratio, which if you're not sure about those, we've got some great videos on that. But either way, if it's something that you're going to be getting a loan and you're going to have to personally qualify for that, then it's going to have to be in your personal name. So some of the DSCR loans will happen and they'll happen in the company name and they'll allow you to hold that in the company. But if you're looking for the very best rates and everything else, if you can credit qualify and you're going to some type of a banking institution, Wells Fargo, Chase, whatever the case is, or even a mortgage banker, they are not going to lend you money in the name of the LLC. They're only going to lend money in your personal name, which means you actually buy the property, get the loan in your personal name, and then you do a transfer of the property into the LLC. So that's the process on something like that if you're looking for a long-term 30-year loan, unless we're dealing with some of the DSCR loan where it will allow you to have it in the trust name or in the LLC's name is probably a better way to say that. So do you need an LLC to go out there and make offers? No. You can go make offers, make sure you say it's assignable, or you can transfer it, or you just do an addendum afterwards saying, hey, we're setting up a new LLC for this purpose to hold the property, have the seller sign it, you sign it, and you're good to go. So you can set that up later. If you're doing fix and flips, I really recommend a special purpose LLC, but I recommend that you set it up later once you actually acquired that property. If you are going to do something for rental properties, if you're looking for that long-term financing, you just put it in your name, and then you do the long-term financing, and then you establish the LLC and transfer it into there. If you are buying through a DSCR loan, which you're going to have to be putting some money down unless you're doing the 100% financing, finding a really good deal, doing the rehab, and then doing a rate and term refinance through a DSCR, you're going to have to put some money into that, and then you could put it into an LLC. But I'll tell you, most of the time, people are too worried about the LLC and less worried about finding a great deal. You can close on a deal without the LLC, or you can get it into an LLC at the time that you need to, right before the closing, if that's the best thing to do, which is why we're here and why we have a membership program and help our members do these things and work through them. The important thing is to go out there and find the property. Go and find the great deal, put that great deal under contract, and then work with somebody that knows what they're doing that can help you out, like us. So that's what we do. The other thing that people get a lot caught up on is the tax benefits. The reality is there's really no tax benefits to the LLC. Okay, bear with me. I know you CPAs are going to be mad at me, but let's just talk a little bit of tax. I'm not a CPA or an accountant or any of that type of stuff, but I do know math, and I do know how this works. So take this all for a grain of salt. But this is where a lot of people get confused. They think that they have to have an LLC in order to have deductions of their expenses. Well, that's not true. You can do it through what's called a sole proprietorship, which is basically, it's just in your own name, so you can do the same thing. The other thing is, at the end of the day, anything that's coming from here is going to your personal income, and that's what you're going to be taxed on anyway. Let me give you an example. Let's say that you buy a house for $100,000. Let's say you put $50,000 of rehab, you pay agent fees or whatever the case is, so you're into it $160,000. Let's say you resell that property for $180,000, okay? So there's a $20,000 gain from the sale of that property. Now, what I can do is I can deduct some business expenses. So I can deduct like my cell phone. I can deduct some type of a car deduction. I can deduct some of those things. And that's something you're going to want to get with your accountant with. And then the idea is, let's say those things were $1,000, now it's $19,000. Now that flows through to your personal return, and that's what you're going to be paying income tax on. Now, whether you do that through an LLC or you do it through a sole proprietor, you're only being taxed on whatever the gain is. The difference is a lot of people like to have an LLC so that they can take some of these other write-offs, and some of these write-offs might be internet and cell phone and everything. The idea is that it's a business expense, but you're also using it for personal, so the business is paying for that and you're getting the write-off of it, which is going to lower that. But you should not be waiting around to do a deal just so you can write off a cell phone, a car, or whatever the case is. Those are things you deal with down the road as you get more experience. I find most people wait to do these things or wait to buy real estate because of an LLC or because it's complicated or anything else. Go find a deal. Go find someone that can help you and let them walk you through it, which is why we're here and why we have a membership program, and we would love to help you out. If you'd like more information, get in touch with us and we can show you the ropes in real estate.